What type of insurance policies do financial advisors need? In my experience, there are four main policies that every financial advisory firm should have, as well as several optional coverage to be considered. I'll describe my reasoning of why these coverage forms are important and how to get them. Hi, I'm Gordon Coyle. Welcome to my channel where we talk about the risk and insurance issues on the minds of business owners. As an expert business insurance broker, these videos are intended to help guide and educate decision makers like you to help make you a more informed decision maker around buying insurance. If I don't answer the question that's on your mind that brought you to this video, reach out and let's connect. I'd love to hear from you. My contact info is in the description box below. So with that, what are the four main policies that every financial advisor should have and why? First is going to be financial advisors E&O insurance, which is also known as errors and omissions liability or professional liability insurance. This policy form is going to protect you, your firm, and other advisors from claims such as lawsuits which allege some professional wrongdoing. Examples of wrongdoing can include providing client inaccurate advice, professional negligence, breaching your fiduciary duty to a client, and simple mistakes that led to a client suffering a financial harm. I did a deeper dive video on this policy type, and you can watch that here. This policy needs to be crafted to include all the services you offer clients. That can include things like consulting, the sale of securities, the sale of life insurance and disability insurance, and ancillary services such as accounting and bookkeeping services. This is a highly bespoke policy form. Second on my list of critical coverage parts for financial advisors is cyber insurance, which is a coverage part that's only purchased by about 30% of small businesses today. I'm not sure what percent of financial advisors are purchasing cyber, but I wouldn't be surprised if it's also in that 30% neighborhood, which to me is kind of scary. A financial advisor's entire business is data. You couldn't run your business without access to your data, your computers, and your storage devices, right? If that is correct, what would happen if ransomware hit your network and shut you down? What would you do? Who would you call? What would it cost? The answer to this cost question is likely a high six-figure number. Another reason why cyber insurance is crucial is to protect your money from fraudulent thefts such as social engineering or wire transfer frauds. The best news is that cyber insurance is relatively cheap and easy to get. For a more detailed explanation of cyber insurance for financial advisors, you can see this video here. Third on my list is going to be commercial crime insurance to protect your client's money and securities as well as your own. When you have control over your client's money, what happens if it's stolen or pilfered from a bank or brokerage account? I also have a video on this particular subject that you can see here. Lastly is going to be general business insurance, often called a BOP policy, to cover your general liability and property exposures and other miscellaneous business exposures. And you guessed it, I have a video on BOP policies for financial advisors that you can see here as well. Okay, those are the four main coverage. So what else do I recommend? Well, first, depending on the size of your firm, it's common for larger advisors to add D&O or directors and officers liability to their E&O policy in a combined policy form. This broadens the protection for the firm's owners and leaders from claims alleging wrongdoing in managing the firm. The next policy is a combined employment practice liability insurance policy, EPLI, and a fiduciary policy. EPLI protects the firm and its leaders from claims which allege wrongful employment acts such as discrimination, harassment, wrongful termination, and more. The fiduciary liability section of the policy covers the trustees of any ERISA-based benefit plan, such as a 401k, for claims that arise alleging breaches of ERISA duties. Then you've got standard forms, such as workers' comp to protect the employees of the firm, business auto protection, umbrella or excess liability protection to provide that extra measure of insurance over your general liability and auto liability coverage. Important to keep in mind is that umbrella or excess policies do not provide extra protection over your E&O, D&O, EPLI, or fiduciary policies. So, how do you get all these coverage forms? If you do a Google search for insurance for financial advisors or some combination of that, you're going to get a bunch of listings from direct sellers who I know only sell one or two of the policies mentioned above. You'll also see digital insurance brokers who don't look like they know what they're talking about when you go to their websites, And you'll see a lot of big name insurance companies. Some of them will sell you a policy directly. Some will refer you to one of their agents. You'll also see association type plans, which I highly discourage going with. It's going to be quite a ways down the Google pipeline before you see an independent broker like me. And that's just a fact of how big a budget we have versus the big names. But being high on Google's list doesn't really necessarily make the seller the right choice, at least in my opinion. For financial advisors, I honestly think the best source of coverage and options is going to be working with a broker like the Coyle Group, who specializes in insuring financial service firms like financial advisors. We have the expertise and deep market representation to make sure you're getting the best protection and the best price. Does that sound self-serving? Sure, it does, but think about how you position yourself in your marketplace. Do you think small business owners or wealthy individuals should engage a big name institution? Or do you think your level of service expertise and maybe history makes more sense? Doing business with a big call center is probably not what you'd consider as ideal for all your clients, and we wouldn't either. So excuse me for my bias, but I think you know where I'm coming from here. The bottom line is that you face significant threats from damaging lawsuits and big risks when handling the money of others. You need protection that's bulletproof so that you have peace of mind that one error or oversight doesn't put you out of business. Do you trust that responsibility to an online broker or call center, or do you think using an entrepreneurial expert is a better bet? If you'd like to learn more, give me a call, drop me an email. You can even book a call on my calendar, and all that information is in the description box below. I look forward to hearing from you, and thanks for watching.